I'm Grace Joseph, and you're onto the Gracia Memoir session. The emotional commitment of bulls and bears is applaudable given that price had been ranging for days before we had a breakout. One group had to take the lead since we couldn't keep ranging forever. So, who's now in pain? Who ran to cover their losses? And who's regretting not buying more or shorting more? Unarguably, the bears emerged victors. I'm Grace Joseph, and this is the Gracia Memoir session. Bitcoin dashed the hopes of bulls in December 2021, that's if there was any left. First, price made a leap above the weekly resistance, closed above it, and gave us a bullish engulfing pattern. But just when we were about to bet we are in for another bull run, we had a strong rejection of higher prices on the next candle. But what really happened there? Let's get a bigger picture. Bitcoin's monthly chart may not have printed a classic evening star, but it still is an evening star. The third red candle is at least 50% of the first green candle, which meets one of the criteria for an evening star. That evening star may as well be a dark cloud cover. Simply match the middle candle with the last one and you've got your dark cloud. It's the same way a candle mat of the dark cloud cover would yield a shooting star. This means that we have an invincible shooting star on the monthly chart confirming previous resistance, which is a very strong bearish signal. Price also took its sweet time to retrace and close below the SMA 200 on the daily. What really caught my attention is the crossover of the EMA 8 below the SMA 200, which means more work has been cut out for the bulls since we don't only have to close above the EMA 8 and 50 but also the SMA 200. Our monthly chart also says price could trade between the 47k and 25k range. Now it's odd that some people are hoping we will have a false downside breakout or bear trap despite all these bearish signals with confirmation. In my opinion, if BTC wanted to resume its uptrend, it wouldn't make over 78.6% retrace from its previous high. Where did all the greedy buyers go if the uptrend is still strong? What's even more baffling is the fact that we didn't get an extended move after a 38.2% correction from an all-time high. Usually a 23.6% to 38.2% shallow retracement would call for a further move to the 1.61 FIB extension level. Another sign of trouble was when the slope of the weekly MACD histogram began pointing downwards even while above its center line. So guys, I would like us to leave sentiment aside because a bull will always see bullish signals, whereas a bear is more likely to see bearish signals. Look at the chart like a bear if you are a bull, and look at the chart as a bull if you are a bear. If you see the same thing after your analysis, then you are probably on track on what could be in the next few months. Not to be biased, I've inverted the scale on the BTC chart and here's what I think. The market is bearish even though price is giving mixed signals. EMA slope is pointing upwards on an inverted scale which hints the next direction. However, our EMA 50 has often served as a strong resistance on the same inverted scale. Prior to this time, price was rocking the neckline of our diagonal head and shoulders pattern on the daily. I call that neckline the bull's last line of defense because now that it's crushed, the bears have more confidence to pounce on the market. Days ago, if you had wanted to short as a bear, I would have said no. Let price breach that neckline before you take a position because you would have been chasing an aging trend given that BTC had already moved from 69k to 46k. But now that's not the case. Given that the weekly trend is down, if you had missed out on our opportunity to short, place a sell short order above the daily EMA and wait for price to rally to the indicator. Another way to do it is to use a trailing sell stop technique, where you place a sell short order one tick below the close of the most recent daily candle. On the other hand, should you long right now? You shouldn't. Recall multiple time frame analysis. It'll prove useful here. Our current zone on the daily time frame is actually a resistance level on the monthly time frame. On a normal day, would you long close to a resistance, or would you wait for that resistance to be breached, retested, and proven to be strong? You do the latter, and our resistance in this case lies around $47,800. Trust the chart and not your gut feeling. That will be all for now until next week on another session on Gracia's memoir. I'm Grace Joseph, and you're onto the Gracia memoir session.